The basis of every business is the exchange of goods and services. Goods and services may be traded for cash or credit. In today's world, a large number of transactions involving huge sums of money take place every day. Therefore, it is inconvenient as well as risky to make or receive payments in cash, and businesses make use of certain documents as a means of making payment. Such documents are called negotiable instruments. A negotiable instrument is a document guaranteeing the payment of a specific amount of money either on demand or at a set time. According to Section 13 of the Negotiable Instruments Act 1881, in India, a negotiable instrument is a promissory note, bill of exchange, or check payable either to order or to bearer. A bill of exchange is a written unconditional order directing a person to pay a specified sum of money. There are three parties: the drawer, the drawee, and the payee. The person who draws the bill is called the drawer. He is the person who gives the order to pay because he has sold the goods on credit. The person on whom the bill is drawn for his acceptance is called the drawee. He is the person who is directed to pay because he has purchased the goods on credit. The person to whom the payment is to be made is called the payee. For example, suppose Raghu sold goods to Ravi on credit and he draws a bill on Ravi and Ravi accepts the bill. Raghu is the drawer and Ravi is the drawee. Raghu has the option to hold the bill till the due date or to transfer it to the other party. If Raghu holds the bill till the due date, Raghu is the payee as he receives payment. If the bill is transferred to a third person, say Ramu, Ramu becomes the payee as he receives the payment. Let's learn about promissory notes. A promissory note is a written unconditional promise by one party, the maker, to pay a specified amount of money to another party, the payee, at a fixed or determinable future time or on demand only to or to the order of a specified person. There are two parties, the maker and the payer. The person who draws or makes the promissory note is called the maker. He is the person who is liable to pay the money. The person in whose favor the promissory note is made is called the payee. He is the person who is eligible to receive the money. For example, suppose Sandeep sells some goods to Mohan on credit. Mohan prepares a promissory note and gives it to Sandeep. In this case, Mohan is the maker and Sandeep is the payee. Let's examine some important terms. 1. Holder. The drawer or the payee who is in possession of the bill is called the holder. The holder must present the bill to the drawee for his acceptance. 2. The holder in due course. A holder in due course is one who obtains a negotiable instrument before maturity in good faith and for a valuable consideration. For example, when a bill is discounted with the banker is the holder in due course. 3. Acceptance. The consent given by the drawee to the bill or order drawn by the drawer is called an acceptance of the bill. 4. Endorsement. The process of transferring ownership of the instrument by the drawer to another person is known as an endorsement. The person to whom the instrument is transferred can get the payment of the instrument from the drawee on the date of maturity. 5. Maturity of bill. The process of a bill becoming due for payment is known as maturity of bill. It is also important to know the various terms on which the maturity date is dependent. These are: 1. Term of a bill. The term of a bill is the time limit for the bill. Usually, the term does not exceed 90 days from the date of the bill. 2. Bill at sight. A bill at sight is an instrument for which the time period is not mentioned. At sight or presentment means on demand. An instrument payable on demand may be presented for payment at any time. 3. Bill after date. This refers to that bill for which the term of the bill commences on the date of drawing the bill. For example, if a bill is drawn on 21st January and is accepted by the drawee on 25th January, the term of the bill commences on 21st January, which is the date of drawing the bill. 4. Bill after sight. This refers to that bill for which the term of the bill commences on the date of acceptance of the bill by the drawee. For example, if a bill is drawn on 21st January and accepted by the drawee on 25th January, the term of the bill commences on 25th January, which is the date of acceptance of the bill. 5. Due date of a bill. The date on which the term of the bill expires is called the due date of a bill. Due date is the date of drawing the bill plus the term of the bill. 6. Maturity date of a bill. The date which comes after adding 3 grace days to the due date of a bill is called the date of maturity. Maturity date for an after-date bill is the date of drawing plus the period plus 3 grace days. The maturity date for an after-sight bill is the date of acceptance plus the period plus 3 grace days. The maturity date for an at-sight bill is the date of presentation. When the date of maturity is an emergency or an unforeseen holiday, the next working day is the date of maturity. When the date of maturity is a public holiday, the preceding business day is the date of maturity. If the month in which the period terminates has no corresponding day, the period shall be considered to expire on the last day of such a month. For example, suppose a bill is drawn on 30th January for the duration of 1 month. The due date of the bill shall be 30th January plus 1 month, which should be 30th February. But as there is no corresponding day in the month of February, the last day of the month, that is 28th February, shall be considered as the due date. And the maturity date shall be 28th February plus 3 grace days, which is 3rd March. Sometimes, when a bill of exchange is dishonored, the drawer or holder may get the bill of exchange noted and protested through a public official known as a notary public. Noting is the recording of the fact of dishonor by a notary public, which becomes evidence of dishonor. To do all this, the notary public charges a fee called noting charges. The amount of noting charges is recovered from the party responsible for the dishonor, generally the debtor. Sometimes, the acceptor of a bill is unable to meet his acceptance on the due date, so he may approach the drawer of the bill before the maturity date arrives to cancel the old bill and draw a new bill with the extended date. This is called a renewal of a bill of exchange. The acceptor, in this case of course, has to pay interest for the extended period. Sometimes, the drawee may make the payment of the bill before the due date. This is called retirement of a bill of exchange. Due to the premature payment done by the drawee, the drawer allows some discount on consideration. Such a discount at the time of the retirement of a bill is an income to the drawee and an expense for the drawer. Usually, a bill of exchange is drawn with consideration. The drawer makes an order to the drawee to make payment for the goods supplied to him. Sometimes, a bill of exchange can be accepted without consideration just to help a friend for short-term finance or for mutual benefit. These bills are discounted by the bank and the proceeds are either retained by the drawer or shared by the two, that is, the drawer and the drawee. These bills are also known as accommodation bills or kite bills. The holder of the bill shall either hold the bill of exchange until maturity, discount it with a banker, or endorse it to a creditor. Let's look at each of these cases. If a bill is held till maturity, on the maturity date, the bill might be honored or dishonored. These are the entries to be passed in the books of the drawer. And these are the entries to be passed in the books of the drawee. If the holder of a bill is in need of money before the due date of the bill, he may discount the bill with the bank. This procedure is called discounting of the bill. The amount deducted by the bank from the face value of the bill is called discount. Such a discount is an expense and is to be debited to the profit and loss account. The discount is usually calculated at a certain rate per annum on the amount of the bill. These are the entries in the books of the drawer. And these are the entries in the books of the drawee. In case of an endorsement, the endorsee receives the payment on the maturity date. The person who endorses the instrument is called the endorser. Hence, the endorsee is the payee. These are the entries in the books of the drawer. These are the entries in the books of the drawee. And these are the entries in the books of the endorsee.